It's the last one for the week. Good morning. Welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ini John McQuan. Good morning and thank you for joining us. Well, we kick off today's show with update from the oil market space. Brent crude prices eased this Friday, but hovered near $70 a barrel as production cuts by major oil producers constrained supply, with optimism about a recovery in demand for the resource in the second half of the year also lending support. Brent crude futures for May slipped 17 cents to $69.46 a barrel, while U.S. West Texas Intermediate crude for April was at $65.79 a barrel, down 23 cents. From month, Brent is on track to post weekly gains for the 8th week after touching a 13-month high on Monday following attacks on Saudi Arabian oil facilities. Sentiment was also buoyed by the decision of the Organization of Petroleum Exporting Countries, OPEC, and its allies, a group known as OPEC Plus, earlier this month to largely hold production cuts in April. Investors have been pumping funds into the commodities such as oil on expectations of a demand recovery in the second half of the year as the global economy grows, while a wider rollout of vaccines against the COVID-19 pandemic allows more people to travel this summer.
And while the global oil price continues to advance, Nigerians should brace up to pay higher for petrol prices. In the latest price template released by the Petroleum Products Pricing Regulatory Agency, the price of premium motor spirit will sell as much as 212 naira 6 kobo per litre. According to the template, petrol prices is expected to sell at a lower retail price of 209 naira 61 kobo and at an upper retail price of 212 naira 61 kobo. The expected ex-depot price, as seen in the template, is 206 naira 42 kobo, while the landing cost is 189 naira 61 kobo. With ex-depot price standing at 206 naira 42 kobo per litre, the March template shows that the landing cost for petrol per litre is 189 naira 61 kobo. Well, this is despite the Nigerian Petroleum Corporation saying there wouldn't be any change in the price of PMS in the month of March. You know, even this morning, NNPC still reiterated the fact that there's not going to be any increase. That means somehow NNPC is subsidizing this petrol, but I don't know for how long we're going to do this.
This has been a long-standing discussion.
We all would have to take until we're able to now be able to refine our own products. Since Dangote Refinery is about to come on board.
We're all looking forward to Dangote Refinery.
Still far.
Well, away from oil to other issues now, Universal Insurance Plc, one of Nigeria's oldest insurance companies, just celebrated 60 years of operations. The company, which specializes in general insurance, now has permission to operate in the retail and agricultural insurance segments.
A joyful atmosphere hangs over this gathering, which aligns with the COVID-19 protocols. In this hall, major players from the insurance sector are present to celebrate what the management of Universal Insurance Plc describes as a story of resilience and triumph as the company marks 60 years of business operations.
Thank you so much. Universal Insurance, as you all know, is one of the foremost insurance companies in Nigeria and has stood the test of time and weathered the storm for 60 years and still standing as solid as ever. 2004, there was a recapitalization. That recapitalization saw a lot of divine intervention.
From being a regional player to a national one, the company believes it's breaking barriers by combining the experience of the old and the vigor of youth to drive insurance penetration.
We have also developed and got approval from National Insurance Commission for 8 retail products. We have also gotten approval from National Insurance Commission to underwrite agric insurance and have set a department to take advantage of revolution that is going on presently in the agric sector of the economy.
Some of those present praised the efforts of Universal Insurance Plc in driving growth.
It certainly means that there is something that is good, very good, that you and your team are doing to make your shareholders feel very proud of you. And therefore, you must not rest on your oars to make sure that you deliver even more to them.
Gladdens our mind. But one very important thing that I would like everybody here, especially on this side, the management and the board and the core investor, the language of the MD, our words are our bonds.
The Universal Insurance Plc was first established by the then Eastern Nigeria government and the African Continental Bank Plc in 1961. But it's now a mega organization with an asset base of over 11 billion naira, authorized and share capital of 16 billion units.
Well, the 2020 Finance Act empowered the FIRS to deploy proprietary or third-party technology applications to enhance tax collection, especially from businesses operating in the digital economy, and to improve local tax administration. The President, Muhammadu Buhari, during the first National Tax Dialogue in January this year, recognized the significance of the digital economy to improving the nation's tax revenue. So how can Nigeria improve tax collection in Nigeria through technology? Olufemi Babim, partner, Tax Regulatory and People's Services at KPMG Nigeria, joins us next.
Well, good morning, Mr. Olufemi Babem. Thank you so much for joining us on Business Morning. Well, with the projected federal government 2021 revenue from non-oil sources estimated at 1.5 trillion naira and budget deficit of 5.60 trillion naira, how important is it to deploy technology in achieving the government's revenue targets?
Good morning, and thank you for, yes, good morning, and thank you for the opportunity to speak on the program.
Okay, well, it seems we're having issues with Mr. Babem there. Well, we hope to get him soon. Well, it's not new, Jimmy, when we talk about budget deficits in the country, well, and state governments, you know, struggling to meet up with, you know.
Yeah, and that is why when we started off the year, of course, this issue of taxation came on board, and that was where the President talked about the need for FIRS to deploy technology and ensure that they plug every, you know, areas where people who are not remitting, you know, their taxes.
Yeah, to widen the tax net.
Exactly, that they get those
All right, I think, Mr. Babem, are you there?
Yes.
Okay, all right. Go ahead, please.
Okay, so I was saying that if you look at the deficit numbers, you will see that the 2021 budget is challenged in terms of government's ability to fund the budgeted expenditure for the year, because we know the crisis we've had in the oil and gas sector. What that means is that for government to be able to fund.
Okay, so I think we should just take a quick break while they sort out this problem, and then we'll get back. We really need to hear what he has to say, because it's important that we understand the need for us to do things differently.
Yes.
You know, if we must achieve the revenue targets, if we must, if the government would have to get more funding to actually carry out some of the infrastructural developments that they plan.
And you know, another thing that comes to mind with the introduction of technology is the, well, possible elimination of transparency, bringing more transparency into the system.
Oh, of course,
because a lot of Nigerians have issues with that.
Yes, and for this to be really successful, companies will really have to allow this, the tax team to actually get into their
books.
Exactly. But let's just take a quick break and then get this corrected, and then we get to hear from Mr. Bambemi. Well, I guess taxation may not just be the only option of financing the budget and infrastructure deficit. Stakeholders in the capital market are also discussing how the capital market can aid the flow of private capital to address Nigeria's budget and infrastructure deficits in a sustainable manner. Well, the head office of the chief economist at the Securities and Exchange Commission, Nigeria, Mr. Oke Umano, joins us now to talk more on that. Good morning, Mr. Umano. Thank you very much for joining us on the program.
Good morning, and thank you for having me.
Well, the SEC has consistently held this budget seminar series. This is the 5th one. What were the impacts of last year's edition on the Nigeria's budget and the economy?
This is the 5th edition of the budget seminar. We had one the previous year, that's the 4th one. And of course, we expected to have a lot of impact from it on the government side. But as you know, last year was a very special year. A lot of things we projected for the year didn't happen because of the pandemic. But on our side, we did what we said we were going to do. You know, at the budget seminar, we said that we will make the capital market ready to support the economy by, going ahead to bring out the rules that are needed for financial inclusion. We also promised to improve our processes, reduce time to market, and other things to ensure that it's easier for issuers to access the market. We also promised to improve non-interest financial market products. And we did all that. Last year, we came out with the crowdfunding rules to enable small entities access the market. So we did as much as we could, given the circumstances of last year.
Well, the theme for this year's series is financing Nigeria's budgets and infrastructure deficit through the capital market. Why has this theme become important at this time?
Yeah, it's become very important because, as you know, as a Nigerian, there's a huge infrastructure gap. And it's obvious that our budgets can no longer or cannot breach this gap. So it's important that we are able to harness capital from other sources, from private sources, to, bridge this gap. So that's why yesterday's seminar was very important. That topic was very important. In that seminar, what we did was to gather all the stakeholders in this and discuss how do we provide this infrastructure to move our country forward. As you may well know, we lack in cost-reducing infrastructure like power, infrastructure around transportation, around health. All these are very important for development of a nation. So we needed to, think of other ways to get around it. And it is our firm belief that the capital market can provide what is needed, to bridge this gap, to provide this infrastructure. All we need to do is get all the stakeholders to sit and, talk around the issues and agree. And then we can move forward. That's what we did yesterday.
All right, Mr. Umano, just hold your thoughts there. We will come back to you. We'll take a quick break, and then we'll continue with this conversation. If you've just joined us, you're watching Business Morning on Channels Television. And of course, we're talking about financing the budget through the capital market. We still have Oke Umano, Head Office of the Chief Economist at the Securities and Exchange Commission. Thank you very much, Mr. Umano, for sticking on.
Thank you.
So how connected is the seminar this year to state government's bonds flotation? I'm asking because the DMO signed an agreement with YFM to undertake capacity building programs with state governments. Are these indications of a state government bonds return to the capital market?
The capital market has always been open to subnational issues. We have tried to do some advocacy with state governments, saying that they can issue revenue bonds. I mean, by revenue bonds, I mean bonds that are tied to projects. So if a state government, for instance, wants to build a road and intends to toll the road to recover the money spent on building the road, then why not? I mean, the states are free to, issue these bonds that are targeted at providing these critical infrastructure. So that's what we've been saying since, and we will continue to, encourage them to come to the market.
Well, some state governments have been rapidly facilitating investments in their states, perhaps to beef up their internal revenue and any other mechanisms or collaborations. Well, how do you see this going? I mean, that the SEC is putting together to help. How is the SEC helping to put all of this together, to achieve the final aim, which is, of course, to finance the budget both for the state and for the federal government?
Okay, so what we have done is to, put the right environment in place. And what does that mean? Get all the stakeholders, understand the issues, know what the impediments are, and remove them. So right now, we have a capital market that is ready. We have exchanges that have, guidelines that are ready. We are ready and waiting for any of these subnational issuers to come. And then even the federal government has been using the capital market. So our role as the SEC is to, make the environment right. And that's what we have done. We now await these subnationals, I mean the states and even the federal government. For instance, let me just give an instance with the non-interest finance products. You saw that the federal government has done 3 sukuk issues targeted at different infrastructure projects, and they were very successful. We are wondering, and we have just one state that has accessed that instrument, the non-interest instrument, and we are wondering why the other states haven't. We have actually even done some advocacy to the states saying this is an opportunity, get a project that is viable, access the sukuk market, and, get this infrastructure going. One of the problems we have had with government, with subnationals, is change in policies. By change in policies, I mean if a road, for instance, is built with money sourced from the capital market, and with the intent that that road will be tolled to pay back the investors, we want to be sure that when another government, when there's a change of government, change of power in that state or in that entity, there won't be, those contracts will still be respected. That's very important to us. And these are all the things we have been discussing with stakeholders. And we hope that we put these things right the way they should be, and it will attract issuances in this area. And the ultimate goal will be to improve infrastructure in the country.
All right, we have seen Ghana returning to the international debt market to raise around $5 billion to reduce its budget deficit by around 8%. Their roadshow begins next week, of course. So are there plans for Nigeria to tap the Euro-Borne space this year?
That would be a question for the DMO. As you may know, the DMO manages government borrowings and not the SEC. But as a person, as a Nigerian, we're all interested in what our country does, especially when it comes to foreign borrowing. I would expect that the federal government, the Federal Ministry of Finance, the DMO, would think through this very carefully before deciding to access Euro-Borne markets. Of course, you know that when you access the foreign debt markets, you have to, it's a bit tricky because you have to earn every dollar you will use to, to pay back. So I think it's a decision for the Ministry of Finance and the DMO and the federal government to make, not the SEC.
Well, the federal government had signaled the possibility of selling some of its assets. What role can SEC play in this strategy, especially when it comes to listing of state-owned companies on the NSE?
The capital market can play a huge role. In fact, the capital market is the best way, the best source for sale of these assets. Because when they are sold through the capital market, Nigerians buy them. These assets now belong to Nigerians, and there's that buy-in. there's that ownership, that sense of ownership that we so badly need in our country right now. Nigerians need to own Nigeria, so that, their interests are tied in this country. So the capital market is the best way, the best source of sale for these things. Selling through the capital market will bring transparency, and it will also bring price discovery. We'll make sure that we are selling these assets at the correct prices, so that the Nigerian government gets the best value for it, the Nigerian people get the best value for it. And I must assure you that the capital market is ready, the SEC is ready, all the rules are there, all the capital market operators are ready. We have issuing houses, we have the exchanges, everybody who will play a part in getting this done is ready. All we are waiting for is for the owners of these assets, the states, the federal government, to approach the market and sell these assets through the market. Please, one very important thing is that ownership by Nigerians. As soon as these assets are sold to Nigerians, there's that increase in the sense of our unity and our ownership of our country. So that's very, very important. And we hope that the assets being marked for sale by the government will come through the market.
Now, the SCC recently got a grant of about $400,000 from the AFDB. Can you tell us what this grant is targeted at? Okay,
we thank the AFDB. The SCC has since, like I was saying earlier, has since embarked on improvement in our capacity and in our efficiency in how we carry out our processes. So in trying to do that, as you may well know, the SCC is funded by the market. So whenever the market is down, the funds at the SCC are low. But that notwithstanding, we have this program at improving our efficiency, and that's why we approached several organizations, including the AFDB, for capacity strengthening. And we are going through so many aspects of that capacity strengthening, through the HR aspects, through the IT aspects, through the redesign of our processes. So the $400,000 grant from AFDB would just help. It will be part of the funding for some of these transformational projects we are going through.
All right. Thank you very much for your time this morning with us, Mr. Umano. Thank you. We do appreciate it.
Thank you. Thank you. Thank you very much.
All right, still talking about financing the budget. Of course, we started with taxation there, where we were trying to talk to Olufemi Babemi, Partner Tax Regulatory and People Services at KPMG Nigeria. Thank you very much, Olufemi. Well, sometimes technology can actually disappoint us. We're talking about technology. So tell me, if technology will keep disappointing us, how can this technology serve us in taxation, which is very important if we must raise revenue for the country?
Thank you very much for having me back, and I apologize for the break we had initially. But the experience we had actually highlights one of the challenges that we would surely have with implementation of technology for tax collection. The internet infrastructure is a major issue, and I think we'll talk about that maybe sometime later. Just to kind of put some framework around the fact that, with the best intention, if you don't have the right infrastructure to deliver it, you still will not get the results that you actually desire.
Okay, so you talked about the challenges now, like you said. I mean, we just saw one of it. Now, when you now look at it in the space of tax collection, which is already sensitive for some people, what are the challenges you envisage, and how do you think that these challenges can be dealt with?
So, I mean, like you've rightly pointed out, the internet infrastructure, or the infrastructure around technology in Nigeria, is still a major challenge. If you look at internet penetration, what the World Bank has actually shown is that just about 42%, that's the internet penetration level we have in Nigeria. So you still have a large portion of the population that has not been reached, or that is not connected to the internet, including businesses. So while you try to expand the tax base using technology, you still have about 60% of businesses, if we're to extrapolate, that you will not still be able to reach because of the technology challenge. The other issue for companies are in terms of the approach or the intent of the FRS, how this would expose their system, issues around cybersecurity, system security, and issues around the security of the data that eventually provides to the FRS. I mean, those are some of the concerns you hear from taxpayers when you discuss these issues with them. But we believe that these are issues that are surmountable. What needs to happen is proactive engagement by the FRS and to ensure that taxpayers can be carried along as the initiative begins to unfold.
All right, I'm sure you did listen to the president at that tax seminar at the beginning of this year where he charged the FIRS to ensure that its deployment of technology for automation is done in line with international best practices. So are there lessons to be learned in this from countries that have successfully automated their tax processes?
Absolutely. There's no doubt that because we are challenged in terms of increasing the tax base. We know Nigerians are complaining about being overtaxed. The price of petrol may soon go up, the price of electricity. So government is careful about not increasing the tax rates currently. So if the tax rate is not going to increase, the only way you can expand tax collection is by expanding the base. And to be able to do that, you need to consider what technology can help you do, reach a lot of the people that are currently not within the net. If we take the example of a country like Brazil that implemented the tax accounting framework so many years ago, as at 2019, what the IMF had reported was that the initiative helped the government of Brazil to increase tax collection by about 180%. So it is obvious from examples in other countries and from other jurisdictions that technology is definitely going to be the way to go if we want to increase the government's revenue from taxation. I'm seeing that we are challenged in terms of increasing rates or even adding more taxes to what people currently pay.
All right, Mr. Babem, just before we let you go in a very short time, how should companies respond to the adoption of technology for tax assessment and collections?
Okay, so in addition to engaging the FIRS, which I think is the most important things that companies need to do, I remember when the HMRC, that's the UK Tax Authority, had implemented the Making Tax Digital initiative. There were extensive roadshows that the tax authorities had conducted because you need the buy-in of the users of that technology for it to be successful. So companies have to proactively engage the FIRS on how this would work and then understand what they need to do from their end. The other things they need to consider are that one is, since this is the future or this is the way the tax authorities are going to go, you need to consider what changes you need to make to your current systems to enable you be ready and prepared for the change that is coming. You need to look at your ERP system, look at your purchase system, look at your accounting system, because what the FIRS will do with the technology is extract data directly from your systems and be able to determine what your tax obligations are without you having to, or before you even file the returns, and they will just compare. So you need to ensure that your systems are in place and they are producing the right results that you need for compliance.
Right, Olufemi Babem, Partner Tax Regulatory and People Services at KPMG Nigeria. Thank you very much for your time, and let's just hope we continue to get it right, the technology space.
Thank you. Yeah, thank you very much.
Okay, let's look at the market. Well, Eddie, it seems the ding-dong movement continues, huh?
Yes, Jimmy, you're right. I mean, short-term investors in the markets couldn't help but cash out on the gains they made on Dangote Cement on Wednesday. So they just quickly took profit, and that was really what happened in the market yesterday, dragging the all-share index by 0.60% to 38,697.17 points, while the equity cap was at 20.246 trillion naira. Now, we saw lower volume value and deals traded in the market yesterday as volume fell by about 54 basis points to 169.35 million units worth 2.11 billion naira, and all of that was traded in 3,568 deals. Sectoral performance was mostly positive yesterday. The banking sector was up 0.01%. Consumer goods was up 0.40%. Now, those are sectors that have posted losses, in previous trading sessions. Although the gains we saw from the banking sector wasn't that much, but that was up. Industrial goods was down 1.70%. Just like we said, Dangote Cement declined yesterday, almost about the same percentage it gained in the previous trading session. Insurance was up 0.69%, while oil and gas declined 0.03%. At the unlisted securities market, we saw some gains there yesterday as the market was up 0.18% at 707.41 points, while the market cap was at 507.58 billion naira. We saw about 5.07 million in it, which was a lot, to be traded in one day on that particular market, worth 23.49 million naira, all traded in 9 deals. Now, the fixed income market yesterday, the bond market, was bearish yesterday as we saw yields in that space decline, rise by about 24 basis points. Now, we saw yields rise at the short and the mid end, while yields at the long end of the curve declined due to demand for the 27th of March 2050 bond. We had 26 deals worth 8.52 billion naira in that counter. There was also some activity in the treasury bills market yesterday. Now, investors just rebalanced or took advantage of the primary market auction. So we saw yields also rise in that space of the market by about 79 basis points, which was a lot, although the actual interest rate in that market is not that impressive. But we saw yields rise in that space. There were 19 deals worth 10.70 billion naira in that counter. We also saw another some activity in the CBN special bills yesterday. We had 6 deals worth 2.73 billion naira. The rates have been similar in previous trading session. Yesterday was at 5%. All of that was worth 2.73 billion naira. While the Omo market was a bit quiet yesterday, we saw yields expand by just 1 basis point in that segment of the market. We had 23 deals worth 34.75 billion naira. Now, with what's happening in the fixed income space, with yields rising, we're still likely to see investors in the equities market, just wait to see what's really happening in that space. I know earlier in the first 3 trading sessions of this week, we saw yields in the bond market precisely decline. So I thought that would be good news for the equities market since yields in that space were declining. But yesterday, we saw yields rise again in that space. So we're not really sure what's going to happen in the short to a medium term. So we'll just keep, like one of the analysts said, we'll just wait and see and monitor what happens in the market. But with we're still expecting more earnings, especially from tier 1 lenders in the market. Hopefully when those earnings come in, and hopefully they're also impressive, because we'd also like to point out that UBA, for example, UBA Group's earnings were impressive, but the bank's earnings weren't so good, and we saw investors react negatively to that, especially because they declared lower dividend compared to what was declared in 2019. So hopefully the earnings that are coming into the market will be impressive. We're still waiting for Dangote Cement's earnings, for example, other FBN holdings, GT Bank. So hopefully when those numbers come into the market, hopefully they're also impressive, and we'll see investors react to those numbers, Chimi. So don't lose hope yet. Hopefully, things will
losing hope.
return.
I'm always hopeful. I see a lot of wait and see mode in that market, and it's just what we see, this profit taking and all, and just
but Chimi, I would
people
say
who want to take quick
time.
profit just come in and cash out. So maybe today again we will see them come in, and then probably you see the market rise, and then
but Chimi, this is the time to actually buy when the market is actually this slow, so that when we see the next rise, like we saw in January, you will cash out.
Appetite investors. But right now, I think we're seeing more of speculators in the market and more of short-term investors. But let's see how that goes. We'll continue to wait and see. And you talked about the numbers. Maybe next week we'll see more numbers coming into the market. In the meantime, let's take a quick break, and when we come back, we'll talk to Juliana.
And now we go to London, our London studio, where Juliana is waiting to tell us what's going on there. Good morning, Juliana. Well, we're starting off on the
Good morning,
data front. Data this morning shows that the UK economy contracted by 2.9% in January. What sector dragged this majorly?
Yes, no surprises that the UK economy took a notable hit in January, 2.9%. This is after an uptick of 1.2% in December. It's the service sector, really, that dealt the biggest blow. That fell by 3.5%. And there's no real sector that was left unscarred. Retail, hairdressers, restaurants, hospitality, they've all been hit as we've been in our third national lockdown. This time last year, it was 9% higher. But I've got to say, it's much smaller than what some economists had projected, which was between 4.6% and 5.7%. And it does show that the UK economy in the first quarter is likely to contract by about 5%.
Well, the UK's rapid vaccine rollout brings a certain level of hope. What quick recovery do we expect following the rollout?
Well, last week we were talking about the OECD, the Paris economic think tank. They upgraded their economic outlook for this country to about 5.6% by the end of the year. And I think the Chancellor of the Exchequer, Rishi Sunak, as well as the Bank of England, are really hoping we can get ourselves through these colder parts of the year, and that the second half of the year, when the sun starts shining, that people will begin to spend again. I think that's what all the projections are saying. As you mentioned, the really incredibly successful vaccination rollout, as well as the roadmap out of lockdown, is expected to give a much needed ladder to the economy so people can start climbing themselves out of this. There was actually even one report yesterday published in an economic an online newspaper that suggested that it's actually the richest Brits that will help us get out of this. They're expected to have saved plenty of money over the past couple of months, and as soon as it is time to come out again, they'll be spending £16 billion worth of extra spending. This is going to be, extra nights out, more clothes in the wardrobe, and a very, very nice summer. And I suppose Prime Minister Boris Johnson will be keeping his fingers crossed, hoping that that's what will happen.
Well, we'll all be keeping our fingers crossed. Well, there's also new UK trade data expected to show a decline in imports and exports in January. Germany reported earlier this week that its trade with the UK plummeted in January, with imports from Britain more than halving. Are you lucky to get a peep at those numbers before now?
I am fortunate. Just for you, Innie, we have had the trade data out. It does show that UK exports and imports are falling at the fastest level since records began in 1997. And I think really this has highlighted what the repercussions and the fallout are of Brexit. Exports fell by 19.3% in January. This is to the tune of £5.3 billion. This is driven by a 40.7% reduction in imports to the EU. So that's really weighing on this trade deficit data. Yesterday, Make UK, the manufacturing lobby group, they've been speaking to 200 business leaders. They're all saying that they are struggling with these new restrictions, lots of new red tape that's been put up because of that Christmas Eve Brexit deal. Imports as well have plunged by £8.9 billion. That's 19.3%. So there'll be lots of food for thought for the Trade Secretary, Liz Truss, that's been spending most of her time hobnobbing outside of the European continent. But of course, the EU are Britain's biggest trading partner, and they don't want Brexit to curtail that close relationship.
Well, thank you so much, Juliana. Ladi will be talking to you later on in the day. Well, talking of Ladi, we're going to the crypto space now,
Ladi,
where Bitcoin is widening the gap. Ladi, what's going on?
Well, Bitcoin is still flirting with that 60K region. We've not broken it yet, but we're still it's still in the works, really. Let's take a look at market cap, $1.73 trillion, up 2.30%. 24-hour volume, $133.02 billion. Let's talk to Tosi Olugbenga, blockchain engineer. Hello, Tosi. Great to have you. Okay, looks like we lost Tosi there. Price of Bitcoin, $56,739, up 2.36% in early trade this morning. 24-hour volume, $56.105 billion traded this morning. The price of Ethereum, $1,797, up 0.72%. 24-hour volume, $22.940 billion. Let's look at the top alts by market cap, the ones the Nigerians love. We have ADA here. ADA's up, down 5%. BNB down 0.69%, $279. We have Polkadot here, down 1.57%. XRP, 45 cents, down 0.25%. XRP still have that issue with the SEC. We're going to hear about that later. We have a Scale Network here, up 97% this morning. And Chiliz, the NFT platforms, going crazy. Chiliz year-to-date performance up 2,200%. Incredible rise, up 76% this morning. We have Matic, 44 cents. I think we have Tosi now. Hello, Tosi.
45 cents. Good morning.
Hello, Tosi.
Yeah, good morning.
Good morning. How's it going, Tosi? I see Bitcoin has not broken that 60K yet. Is it possible this week?
Yeah, we're actually looking for the possibility of Bitcoin hitting 60,000 naira before the end of this week. And what we are experiencing now is more of institutional buyers. Institutions, very big institutions, are now acquiring Bitcoin at a very large volume. So, and as it is happening, very soon we'll have a situation whereby nobody wants to sell his or her Bitcoin again. And when that happens, the price continues to go up because we will have more buyers than actually sellers. So,
all right,
that's what happens.
All right, Tosi, so most of these altcoins have gone up incredibly. Like CHZ has done about 2,200% from the beginning of this year. So most of these alts have done well. Are we still going to have an alt season?
Yeah, you know, when you talk about altcoins, most of them have very good use cases. If you look at ASBI, for instance, is one of the leading decentralized finance coin token that has about $13 billion in its capital in the total half of the DFI altcoin sector. So, and we also have the FT now, which is also trending. So, as innovations continue to go up, we will continue to have more use cases of tokens. And, the purpose of cryptocurrency is to decentralize finance in the whole world. So, bringing the world together on one economic financial table. So, innovations will continue to flow in. And when it continues to flow in, more coins with good use cases continue to come up, and the price also continues to go up until we reach a point of equilibrium.
Yeah, I know we've had a DeFi trend, we've had NFT right now going on. What's the next trend?
Like I just said, we cannot say this. It is going to be born by innovation. All right? Maybe somebody is coming up to develop a news token, for instance, a token that talks about news. So that could be a new trend of altcoins. So these are the things that, it is innovation that is going to actually bring it out, not what nobody can actually say this is meant to like going to come.
You can't predict it.
Right? Like musicians globally, for instance, can come up with their own coin where their fans can buy.
Okay.
So many innovations will keep coming on, and as they keep coming, the earlier
keep tracking it.
Advantage of it. Yeah.
Okay. All right, Tosi. Thank you so much. Tosi is a blockchain engineer. Thank you so much for your time. All right, Ini, there we have it. NFTs still going crazy. We should have bought these NFTs, but we didn't.
Well, of course, this week we seem to have seen the bull and the bear struggle in that space. Perhaps this is weekend. Maybe we would see Bitcoin get to that 60K that we are talking about. And then, yes, you talked about the NFT, the DFI, and then you did mention the Chiliz. Is that the CAZ?
Yeah, Chiliz, yes. This one is actually an NFT platform.
This is weekend, and you're talking about the alt season. So institutional investors are looking at the Bitcoins, and then retail investors like you and I and Ini should be looking at the altcoin. So what's your coin pick for the weekend?
For the weekend, it's still ZRX for me.
Oh, ZRS.
Yeah.
Well, I guess this is not a financial advice.
Not financial advice.
Okay. It's on that note that we draw the curtain on today's edition of the program and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ini John Mekwa. Have a great weekend.